Today on Go Ahead Ask, hard money loans can make a great investment for your self-directed IRA and individual 401k plan. What are hard money loans? How and why would you invest in hard money loans inside of your self-directed retirement account? Let's unravel that mystery today on Go Ahead and Ask.
Building wealth in real estate? Let the Exeter Group take the mystery out of how it's done on Go Ahead Ask.
Welcome to the Go Ahead Ask podcast by the Exeter Group, where we unravel the mystery of investment in real estate. Our goal is to provide investors with better quality education so they can make better informed investment decisions. I'm Bill Exeter, Chief Executive Officer of Exeter Trust Company, and your host today. The Exeter Group of Companies includes Exeter 1031 Exchange Services that serves as a qualified intermediary. We administer all types of 1031 exchanges. We cover all 50 states. It also includes Exeter Trust Company that serves as IRA custodian for self-directed IRAs and self-directed individual 401ks. We serve as escrow agent for specialty holding escrows. We serve as trustee for title holding trusts or land trusts. And we also serve as custodian just for general custody services. As always, here on Go Ahead Ask, we encourage questions and we encourage topics. So feel free to call us at area code 619-239-3091 or email us at ask@exetercode.com. And if you love our podcast, please like it, subscribe to it, share it, and comment on it. We will address all comments, answer any questions that might come up. Today, our podcast is entitled Unraveling the Mystery of Investing in Hard Money Loans Inside of Self-Directed 401ks and Self-Directed IRAs. One of the most frequent questions we get from clients and listeners is what should they invest in when they're inside the Self-Directed IRA? What type of assets, what asset classes? We had a high-level discussion on self-directed IRAs and individual 401k plans back in our episode number 10. And then we addressed the mechanics of actually buying alternative assets, especially real estate, inside self-directed retirement accounts back in episode number 23 of Go Ahead Ask. So feel free to go back and visit those two podcasts to get more information on self-directed IRAs. One of the more common investments we see inside of self-directed IRAs and individual 401k plans are hard money loans or private money loans. People refer to them also as deeds of trust or trust deeds or mortgages, etc. But that's one of the more common ones. So today we're going to unravel the mystery of what are hard money loans or private money loans. Why would you invest in hard money loans? So let's go ahead and unravel that mystery today. And today we're really excited to have a guest with us who's a hard money lender and a hard money expert. And I have a hard time with his last name, so I'm going to go with Rancho Ted. And yes. Rancho Ted's been in the real estate lending business for 30 years, conventional lending for 17 years, hard money lending for 13 years, and a trust deed investor. So he actually talks the talk and walk the walk for 20 years. So welcome to Go Ahead Ask.
All right. Great to be here.
And anything else you'd like the listeners to know about you personally before we really dive into the hard money topics?
Well, I'll tell you, a lot of people wonder where the Rancho Ted comes from. And I was getting on Facebook, Twitter, and LinkedIn back in 2010, and a friend of mine was helping me, and he said, no, you should brand yourself. And I said, it's a great idea. A lot of companies are going out of business, so always different names. And so at the time I was working for Rancho Financial. I own a ranch in Alpine. He says, why don't you call yourself Rancho Ted? And I thought that was one of the dumbest things I've ever heard. And I wouldn't do it, but a friend of mine talked me into it, and it took a couple of years to get used to it, but the brand name certainly stands out. People remember it. It's been great. Yeah.
So. It does. I remember one day driving down the road and all of a sudden I saw Rancho Ted on a bus bench, and it's like, oh my God, that's Rancho Ted.
Yeah. And it's sticks out pretty good, so
it does.
It's hard to forget it. Yeah.
And you're from Webster, Massachusetts.
Yes.
What brought you from Massachusetts to California?
Growing up, I was a big Chargers fan. So back in the 70s with Dan Fouts and the crew, I used to see people wearing shorts and T-shirts and thinking, damn, that looks good, And so when I finished college, I didn't even visit. I just drove here with some friends from college and landed here, and I was right. And landed in Mission Beach. That's where I was at back when I was 23. So
which is the place to be when you're 23.
Yeah, a lot of fun. And so I've been here 35 years now, and I would never leave. At least I hope I don't leave. It's all about the weather for me. but there's a lot of things you can do in San Diego or in my hometown, limited because of the cold and all that.
Absolutely. And tell us more about Rancho Ted. What does Rancho Ted do? And what's their focus? What's their specialty?
Sure. So in 2008, when I was doing the conventional lending, it was getting really frustrating because there were very easy loans that were getting done before. And I'm not talking so much stated income, but when I was doing, the full doc in the 90s, and they were turning them down, just, let's say it was a refi, value is 5 million, the loan was for 400,000, and the lady's debt ratio, which is income to what you make and all, was like 52, and they wouldn't do it. And I'm thinking,
Wow.
This is incredible, So, and I realized that the subprime was no longer available, and my friends did private money, and I said, I think I'm going to go do this because it's about common sense when you do private money, where conventional lending is about fitting in the box. And so I jumped into the private money world and I've been doing it since and really enjoy it. It's all about common sense. Makes sense you do it, and I can't say enough how wonderful that is.
Common sense is refreshing nowadays.
Yeah,
you don't see a whole lot of that at all.
No, you don't.
Well, there's certainly a lot of misconceptions out there about hard money and private money.
Yeah.
And I love a quote on your website that says, hard money is not hard.
Yeah.
So maybe go into what is a hard money loan? What's the difference, if any, between hard money and private money?
Sure. Well, it's basically the same thing, hard money, private money. When you talk to people, they get scared. Hard money, what's that? It's really expensive. What private money is, it's situational lending. People are in spots that they need money really fast. Could be 3 days. We can close in 3 days. They may have a credit issue from a divorce. They really want to buy a property that's come available, but banks won't give it to them. So you step in and help them get through that. And the short-term loans, for the most part, they usually can be 1 month, 6 months, 1 year, 2 years. 2 years is kind of the number because after 2 years, whatever issue you have, you can get into a conventional loan. Sometimes people sell the property, but it's really situational lending.
Gotcha. So really, and it helps solve problems. So you're really a problem solver, try to figure out what's their pain point and what can you do to address that issue.
Correct. I can go all day on situations. So we can talk about some of them later.
Like lots and lots of examples.
Yeah.
What's a good hard money loan versus a bad hard money loan? You can give examples maybe of kind of what you've seen out there typically.
Sure. Well, a good hard money loan is generally, it's all about equity and loan to value. So 70% is the magic number. So if you're buying a house for $1 million, you put down 300,000, you're at 70. It's a good hard money loan for an investor. If you go above that, the risk factor goes up that if something happens, you have to foreclose. You may not get all your interest and money back. So, and then there are different risks when you start doing construction loans, land loans. Those get a little bit riskier if there's an issue. The good loans are really residential, below 70%.
And with today's crazy market, if I can call it that, does that affect the loan to value ratios you guys are looking at today?
You start to wonder where this is going to end, and a lot of it really comes down to who you're lending to. So with private money, hard money, you don't really need the person's taxes, but you kind of want to see what's going on there, and you also want to look at the credit. Like I said, credit doesn't matter, but it does. You still want to know if it's a good borrow. So you kind of take the risk factor, and then also the property itself. It could be in rough shape. So you kind of weigh up who you're lending to. Sometimes it could be a doctor, it could be an engineer, and you see who the person is and why they need the money. So you weigh it up. But if you feel like, I'm not sure, you may do a little lower loan to value. If the market drops, you'll be safe there.
Just in case. Yeah. I guess today the traditional lenders just do it by the numbers. And if the numbers don't pencil out or they don't check off all their boxes, the answer is no, period, regardless. So that could be frustrating. So it's great that we've got people that like you that go to and kind of solve those issues. Yeah. What type of properties do you see hard money loans on typically? And what's your sweet spot?
Sure. Well, residential is really my sweet spot because they're very safe, easy to do, plenty of comps. So it helps with investors, makes them comfortable. I have a lot of investors who are educated in there, so they kind of do their own research too, which helps. But We kind of do everything, people flipping, and that can be a little risky, but again, loan to value speaks on you fund control the money, so you make sure that the work is done. Again, we certainly are nervous about land loans, but there are some very good land loans. I did one in Calabasas, no brainer. But then you get those loans out in the desert.
I wonder if there's any resale value at all at some point.
Well, I have a lot of friends who really got beat up pretty bad in 2008 and 9.
Yeah.
The values just dropped and didn't come back. And still, one of my investors just getting rid of a couple properties since 2008.
That's a long haul to make a recovery.
Yeah.
One of my favorite things is investors, especially new investors who love the term "no money down."
Yes.
So, can you work with them? How does that work? Because it sounds like they have no money into the game.
Yeah, correct. I'm doing a deal right now, and this one is actually putting a little bit of money down for a flip, but he doesn't have enough. And he wants to control the money for the fund control, because it is a lot of work asking for the funds and show me what you've done and blah, blah, blah. So what we're doing is crossing it with another property. And that's a way you actually can put no money down or a little bit of money. It gets around a lot of issues. But you still need a lot of equity in the property you're crossing. This particular person owes $300,000, the value is 1.5. A lot of equity there, so we just crossed it with that one to help him with the down payment. So you can put no money down, and you also can put a little money down across it and resolve some issues there if you want to.
And this is a little off topic. For those of our clients who do reverse 1031 exchanges, the hard money can do that as well. There's no prohibition from cross-collateralization or anything like that.
We do a lot of 1031 exchanges, and especially when they get down to the end, they can't get the conventional loan, we step in. Usually in those 1031 exchanges, they're pretty easy. There's a lot of equity. So,
and a lot of those are probably last minute deals where they thought they'd get traditional financing, and then the traditional financing said, no, we're not going to do it.
Yeah, just a lot of times these poor mortgage brokers, they're at the mercy of the underwriter, and they throw something at the end, can't do it. And just had one last month on Saturday. She called me up, said I need to close Friday. It was Saturday. And we closed it on Wednesday. It's really not that hard. All the information's there. So you hand it to the investor, their experience. Within an hour, they'll see how to do it. Draw a loan doc, sign, and close the next day.
Perfect. What kind of terms do you see, and what kind of rates do you see out there in the market today?
For the most part, they're between 8 and 9%, and it really goes down to loan to value. So if you're at 70%, it's probably 9. If you go down to 50, it's 8%, and somewhere is 8.5. The terms, I try to work with all the borrowers because they are in situations where they only need the loan a month. So we may raise the rate a little bit to make it 9.5 or 10%. I may give the investor part of the fee. In general, the fee is between 1 and 2 points. I may give the investor 0.5% to make it work, and we'll do no prepays. It's all over the board, but we work with both the investor and the borrower to make it worth their while. Win-win.
Okay, super. We're going to take a quick commercial break here for a message from our sponsor. This episode is sponsored by our sister company, Exeter Trust Company. Did you know that all individual retirement accounts are self-directed IRAs? It's because you choose where to put them. You choose whether to put your self-directed IRA at a bank or at a securities or brokerage firm or a life insurance company. So that makes it self-directed. But did you also know that all IRA custodians are not created equal? Most IRA custodians, like the banks, the securities firms, and the life insurance companies, limit you to publicly traded investments such as stocks and bonds and mutual funds. But some IRA custodians, like Exeter Trust Company, allow investors to invest their IRA funds in other alternative assets such as real estate. Investors can acquire real estate, mortgages, deeds of trust, or tax lien certificates inside the IRA as an investment inside the IRA. To learn more, call Exeter Trust Company at area code 307-222-8750 or visit them on the internet at exetertrustcompany.net. And we're back with Go Ahead Ask, and we're talking today about unraveling the mystery of investing in hard money loans inside self-directed IRAs. And we've just kind of gone through the terms that we see. And so those are the current terms, 8 to 9%, et cetera. The market's obviously changed a lot recently. So historically, is that also what you see, or has that changed a lot over the last few years?
It's actually changed because there are what they call non-QM loans out there now, non-qualifying mortgages.
Okay.
So Wall Street's coming out with those stated income programs again. And there are some stated income on investment properties we can get like 4.5%, 5%, no docs, as long as the FICO is reasonable. So that's pretty good rate.
That's hard to beat that sucker.
Right. So you're not using private investors. I'm working with those non-QM lenders, and they are a dozen. I mean, there's thousands of them sending me emails to work with their companies, and we've been doing a lot of them. So instead of doing with private money, we're doing those loans. So that helps the borrower a lot. Doesn't help the private investor. And real quick, the one thing I want to point out is there are so many people that don't even know this exists, private money, trustee investing. I would speak at some seminars, and out of 100 people, one person is an investor. So they don't really know it exists. So this is great that you're educating everybody to know that this is.
It's certainly an important tool, and a lot of people have heard the term maybe, and that's it, and they don't even know what it is, but they have that negative connotation, and it's a phenomenal tool, and it solves problems.
And one of the things for the investor is you have collateral, the real estate. Huge. Something goes wrong, you've got something to get your money back. And you can do some long-term loans for 2 or 3 years. It's great.
That's perfect. The when you focus, we've been focusing on hard money lending, so maybe we can turn it and focus on the investor. So what type of investors is this right for? What type of investors do you think that like this type of investment?
I think everybody does. But what happens to me is I will have a friend of mine, he's never done it before, he starts investing, and then he tells his friend, he's like, what?
And he's hooked.
So then he does it, and then so they're nervous at first, like I've done one where the value was 800 and I was lending 50,000, and this guy's nervous, and I said, don't be nervous, man, you're in good shape. You hope they don't pay, but what happens if they don't pay, it goes to foreclosure, it goes to auction, so you don't get the property. There may be instances where you do, but for the most part, there are people at auctions that buy these properties. But that's what happens. It just starts to spread. People start learning about it. The downside of doing the private monies is the loans don't last that long. So you can have a loan for 6 months, and that's what investors really like, is a 6-month minimum, so they don't have to keep getting new loans. But once that ends, you need another new loan. So I get a lot of people calling me, hey, you got any deals, got any deals, got any deals? And it's hard. I've got a lot of investors, so it's hard to get everybody in the deal. So it's a challenge.
That makes sense. And so really the process is you have somebody who approaches you with a problem or a challenge,
Right.
and they need the hard money financing to get through that,
Right.
some creative financing to solve the problem.
Yep.
Then you package it, and at that point offer it to the investors, and then they decide whether they want to invest or not.
Correct. So they underwrite it with me. We talk about it. They may not have the experience where I do, and I've also had a couple partners that have a lot of experience, 30 years. So we make a decision. I do a lot of networking, which allows me to get these really simple deals. So there's not much work into it. The loan to values can be 50%, not hard. So, yeah.
Perfect. And from the investor's perspective, I guess they could use either non-retirement funds if they wanted to, or they could use retirement funds. So maybe talk about how how you work with the retirement accounts and how that might work in terms of funding it through the self-directed IRA.
Sure. The self-directed IRAs, which I have one myself, you really like to get into longer term loans so you don't have to keep doing this. So if there's one available for 2 years, put it in there, you sit back and just keep collecting your money. There's nothing much to do. We do have servicing companies that collect the money, and then they send it to your IRA every month so you can keep on top of it. The downside of using a self-directed IRA is when we get deals, they usually are kind of an emergency and they need to close quickly. Sometimes the self-directed IRAs will take a week to get the money to us. So it's a purchase, hard to get sometimes to use those IRAs, but the refis, no rush. I know I have plenty of them, so it's not like I can't do and help people out with that. But so that's kind of the both sides of investing in the
So the key there is working with an IRA custodian that can do a quick turnaround. If they can't do a quick turnaround, it's
extremely important. There's some people that lose their minds with some of these self-directed IRAs that they're just taking too long.
Yeah.
And then we tell them, hey, we can't use you. We need to close. And they're not too happy with that, but it's what it is. We got to do it.
Is what is. The quick turnaround is critical. And of course, there's also some folks who use the IRA and then set up what they call checkbook IRAs. So
Yes.
it's an IRA that can, opens funds and capitalizes a
Good point.
LLC, and then really they're the manager of the LLC. But you have to be very careful with those type of LLCs. I had a client call last week, and his CPA said, "You have a problem." So he called me and said, "I don't get this. What's the problem?" He said, "Well, walk me through the problem." And he said, "Well, I have an IRA. It set up an LLC. It funded the LLC. The IRA is the sole member of the LLC. I'm the manager of the LLC. And we bought real estate, and we decided to leverage the real estate in the IRA." And I said, "Well, so far, so good." And then he said, and I don't get it, but then I personally guaranteed the debt. I'm like, and there is your problem. Because now it's a prohibited transaction because you've personally guaranteed the debt that the IRA signed off on. So that's the problem, is investors don't know what they don't know.
Yeah.
And if you do a checkbook IRA, as they call it, which is the IRA controlled LLC, it's easy for the investor to do something that they don't know is a problem.
Yeah, good point.
It seems logical, but so you really need an IRA custodian who can do a quick turnaround and go with that. So what are the benefits of using or investing in hard money loans through the self-directed IRA? What do you see the investors really like about that when they pull it together?
Sure. The best part, like I said, it's really the term of the loan where they can sit back and not have to worry about reinvesting if they get a long-term loan. They get a check every month in their IRA, and I've got friends who, my God, they just make a ton of money. They're not taxed on it. They make a killing.
Yep. When you think about it, if it's 8-9%, it's either tax deferred or tax free, and it just keeps building. So
it's a great tool to get your money out there, and again, the collateral's the real estate. Not much to worry about, really. Even if the market dropped, I think of worse things on the planet than taking a property back in San Diego. Values go right back up, and you collect rents on the money, on the property. So it's not like you're not getting any investment back. It's fantastic.
It's kind of win-win all the way around. So you've described that typically the borrower approaches you. They've got an issue. You package the loan and underwrite the loan, present it to investors. Investors then decide, yes, I'll do it. I buy into it. I fund the investment. Then you mentioned a service bureau. So there's a servicing company that actually services the debt.
Yes.
And then they send the check to the IRA. The IRA custodian then credits to their account.
Correct. So you never deal with the borrower. The service company is the contact, or myself. I would call the borrower and say, hey, what's going on? You haven't made your payment. So we step in, and there are times where people are late. But in 13 years, I've only had 3 bad loans. And
that's a good track record.
Yeah, it really is. And people did get all their money back in those 3 bad loans, but it takes quite a while. It can take up to a year. And that's, I guess, when you want to say something what's good about it, in the self-directed IRA, you don't need that money. It's going in your IRA. Even if it takes a year, you get all your interest back, plus your principal. So it doesn't really affect you. People who use their personal money, it affects them because they want that check every month to help pay the rent, whatever it is. But the self-directed IRA is probably the best way because you don't need the money. So
True. And I guess worst case, the borrower fails to pay, the IRA then has to foreclose, take the property back. And if you do the underwriting right, you're probably going to make extra profit because you've got some equity there that you can.
Yeah, one of the things, if a person is late, there's a late fee. And if you're at 9%, the late fee is usually 6% over. So you're making 15% on your money. So I have people like, they're late. and they're making 15%. So yeah, you can make some serious money if a person goes into default. Certainly don't want that. You want the borrower to, obviously, we want it to win-win. We don't want anybody going into foreclosure.
Absolutely. But I think that's the biggest fear is people think hard money, oh my gosh, and if I make the loan and they can't pay, and
Yeah.
I'm out. And you're really
Yeah.
not. If you do the underwriting correctly, you're in good
yeah.
shape.
Yeah, you get a little, some deals are just so simple, there's nothing to worry about. Then, people who are new to the industry get a little nervous, understandably. But after a while, they understand and they're comfortable and they're like, hey, and I guess some people say, look, I only lend on property I don't mind owning. So that helps too for them. They're comfortable. Hey, if I take it back, great. I will tell you, the odds of taking it back are very slim because people are at those auctions and they will buy that property at the lower
They'll
price.
take it. And if you're lending 50,000 and 800,000, I will take that in a heartbeat.
I still laugh at that one, and I understand. If you've never done it, I remember the first one I did. I'm not sure about this.
It's true.
Yeah.
Gotta love it. Any last comments or thoughts for the listeners that you want to throw out there?
Well, I'm glad we get to speak because I try to. One of the problems I have is most real estate agents don't understand hard money either, and the mortgage brokers don't understand it. So nobody knows how it works. So I try to do some lunch and learn classes. And if you can get educated, the hardest part is getting a private money lender like myself to give you deals. And once you're in the circle, you'll be getting more deals because, it can't please everybody. But once you get in there, you can certainly get deals pretty consistently.
And you're right. There's just a lot of people who don't know about it. And so they don't know that as a realtor, let's say, if you've got a client with a problem, this could be a great solution.
Yeah, it is. And they just don't know. And the mortgage broker doesn't know. So I started doing lunch and learns around the city to help educate them. Still, they don't come. And then someday somebody says, hey, use private money. And they're like, I don't know how it works, and then they do. And then they understand and close more deals.
Perfect. Well, we'll have to have you come back and do a couple of case studies, if you will,
I tell you,
really get into that.
Case studies really help people understand.
That'll be a good deal.
Yeah.
Well, thank you for joining us today. That's been a lot of good information. And thank you for listening to Go Ahead Ask podcast. Our last episode was on reverse 1031 exchanges. And the next episode, we're going to be talking about investing in certain types of oil and gas interests as part of a 1031 exchange transaction. As always on Go Ahead Ask, we encourage questions and topics, so feel free to email us at ask@exeterco.com or give us a call at 619-239-3091. Or if you'd like to appear on Go Ahead Ask, please let us know. We'd be happy to chat about it. If you love our podcast, please like it, subscribe to it, share it, and comment on it, and we will respond to all comments and questions that you post out there. Thanks for joining us. See you next time.
Thank you for listening to Go Ahead Ask with the Exeter Group. Join us for our next episode when we further unravel the mysteries of real estate.